The stock market bull run has continued well into 2024. The S&P 500 is now securely at all-time highs. Likewise, my dividend stock portfolio is at a new high of over $166,000. I share the progress of that account every month here on YouTube. The goal is to grow this portfolio into a reliable source of high-growth dividend income. That cash flow can be taken out to pay bills or reinvested to acquire even more stocks. My dividend income is already starting to pile up. I got paid $485 in March. Over the next year, it's projected to pay over $4,500. That's assuming no dividend growth or additional capital invested. In reality, my dividend income will continue to grow far beyond this. The best part of this dividend-based strategy is that you're not forced to sell stock in order to reap financial reward. Instead, you are getting paid a distribution of the company's profits. It really helps drive home the mindset that a stock is not just a ticker with a price that moves up and down. It's a real business with real profits. When you buy a stock, you are buying a small ownership stake in that business. With dividends, you maintain your ownership and can even use cash flow to reinvest and increase ownership in the same stock or another. If you invest wisely, then this can massively increase your long-term compounding. Personally, I reinvest 100% of my earned dividends as I have a long investing time horizon. The dividend income paid out is only just one part of the equation. I follow a dividend growth strategy where I focus on companies with strong business models who regularly grow cash flows at a high rate. I try to find businesses where this growth will continue or accelerate into the future. This growing cash flow means two things. First, the capacity for future dividend payments is growing as dividends are downstream of free cash flow. Second, the intrinsic value of the stock is growing. A business is valued on the discounted present value of its future cash flows. So in general, when earnings and cash flows grow, the intrinsic value of the business does as well. Over time, the stock price rises to reflect this change. So far, I've earned over a $55,000 gain in the value of my dividend portfolio. This will continue to expand long term. I built a stock research tool which helps me identify these types of companies. For example, Microsoft and Visa are both core parts of my dividend growth portfolio. Visa is a money printing machine. It has 80% gross margins and 50% net margins. Free cash flow per share is growing at a 25% 10-year compound annual growth rate. Likewise, dividends are growing at a 17.92% 10-year CAGR. They buy back shares at a high rate. Visa is just one example of an investment which fits my criteria. The overall goal is to get a total return at or above the S&P 500. This is while building a stream of reliable and growing dividend income. I do not chase high dividend yield as I'm not trying to live off dividends immediately. However, I do occasionally find opportunities in high yield stocks, some of which have been my best performing investments. For example, ExxonMobil was selling very cheap during the 2020 oil crash, and I used the opportunity to buy the stock at a 9% dividend yield. From reinvesting dividends, I now have 25.5 shares and an 11% yield on my initial cost basis. I have a 250% total return in just over 3.5 years. Other high yield stocks include Altria, which I'm buying in the 9 to 10% dividend yield range. I'm still buying this right now, as I'll explain later. High dividend yield by itself means very little. All that means is the price is low relative to the dividend payment. However, some view a high yield as a signal of the dividend being unsafe. You always need to look deeper. This is when we dive into the company's financial statements and see how the dividend payment is relative to their free cash flow and earnings. You can also view the dividend payout ratio for both metrics. More on that later. In today's video, I'm going to provide an update on my long-term dividend growth stock portfolio. I'll explain how much it makes both with dividends and capital appreciation. Finally, I'll share my new buys. Let's roll the intro. My name is Zach, this is Dividend Data, and you should leave a like and subscribe to the channel if you enjoyed the video. Throughout, I'll be using my stock research and portfolio tracking tool, dividenddata.com. I just published a massive new update, especially for those tracking their portfolios. You can now automatically link supported US brokerages. This includes Merrill, Robinhood, Charles Schwab, M1 Finance, E-Trade, Interactive Brokers, Wealthfront, Vanguard, Betterment, and more. Here you need to select and go through the Plaid authentication flow flow just one time. After that, your portfolio will continuously update and notify you when new holdings are available. That significantly improves the user experience, as existing users will know well. On top of this, your history of dividends earned is now included with the automatic link too. That is a big upgrade. Automatic users also get a customized button layout, which makes it far more simple. You can switch to manual tracking at any time and get even more customization. If you want to replace your manual or old portfolio with an automatic link, then hit the Switch to Auto Link button on the portfolio page. Please message if you have any questions. I also added a product roadmap and feedback section where you can make suggestions. Also, you can actively track which features I'm working on and may be coming soon. DividendData.com will only keep getting better and better. In stock terms, the intrinsic value continues to grow. Become a member with the link in the description and pinned comment. Now let's dive into my portfolio. My dividend portfolio is currently valued at $166,169. With $110,324 invested, my total return is 50.62%. I have 13 total stocks, with it heavily concentrated in my top holdings. In order of value from highest to lowest, I have Microsoft, ticker symbol MSFT, Altria, ticker symbol MO, ExxonMobil, ticker symbol XOM, Disney, ticker symbol DIS, Broadcom, ticker symbol AVGO, Visa, ticker symbol V, T. Rowe Price Group, ticker symbol TROW, Apple, ticker symbol AAPL, Kroger, ticker symbol KR, Enterprise Product Partners, ticker symbol EPD, PepsiCo, ticker symbol PEP, Chevron, ticker symbol CVX, Automatic Data Processing, ticker symbol ADP. Leave a comment below if you'd like to see a full updated video on any of these specific stocks. This dividend portfolio is not set in stone and could change as the economic reality of any of these businesses change. That said, I do have some core holdings which I think I can build on for years to come. This includes Microsoft, Visa, Broadcom, and Apple. I also have the high yield value plays like Exxon and Altria, where I secured great cash flow. I'll likely keep these dividends and reinvest into the same stock or others. I am open to selling some of my positions if I find a high quality business trading at a no-brainer price. Overall though, my preference is just to add new capital rather than sell. However, that is not the current market environment right now. The stock market is frothy and at all-time highs. There are some individual stocks which are interesting, but I don't see many screaming buys. These high prices actually make me more hesitant to invest. I see far too many people getting greedy. That said, I still actively follow the market and track a large list of stocks on my watch list. Some of these fall into dividend growth stocks, while others would fall into more value categories. I really don't like these labels though. Instead, I try to think of my watch list as a collection of businesses which I find interesting. Of these, I think Tesla is a good buy and may fall more in 2024. It's currently down 28% from its 200-day moving average. Aside from Microsoft, Tesla is my top investment. This falls outside of my dividend portfolio. Let me know in the comments if you want to see a video about the stocks in my watch list. My dividend growth portfolio is projected to pay $4,545 in annual income. That's $1,136 every quarter, $378 every month, $12.45 every day, or 52 cents every hour. Here you can see the changes month by month. In April, I'm projected to make $538. In May, this goes all the way down to $79. June will go up to $489, and July all the way to $596. This July jump is thanks to Disney's semi-annual dividend. Altria is set to pay me nearly $500 on April 30th. This makes it my top dividend payer at nearly $2,000. Remember everyone, all these companies fall into the dividend growth category where they regularly grow their payments on an annual basis. That means my income will continue to rise without doing anything. On top of this, I reinvest dividends to buy more shares and buy with added new capital. This creates a virtuous cycle we like to call the dividend snowball effect. Here you can see my earned dividend history. The total dividends paid is $12,160. My 2023 dividend payment was $3,500. So far in 2024, I'm at $1,131. In March, I got paid $485. Recent dividends include $12.68 from ADP, $26.16 from PepsiCo, $59.08 from Broadcom, $110.50 from T. Rowe Price, $76.11 from Microsoft, $34.40 from Chevron, and $154 from ExxonMobil. All of these have been reinvested to acquire more shares. Aside from that, I have only bought one stock in my dividend portfolio since my last update. That was 15 shares of the Altria Group, ticker symbol MO, at a cost per share of $39.79. That's a total cost of $596.85. With the forward-looking annual dividend of $3.92, I bought the stock at a 9.85% dividend yield. So why did I buy Altria? Well, it offers reliable, slow growth while trading at a valuation of just 9 times earnings. The high dividend payment is sustainable at a 75% free cash flow based payout ratio. The dividend grows at a 4% 5-year CAGR. This is in line with the growth of free cash flow per share. Altria should be able to sustain this growth rate and the return of capital to shareholders. There was actually a piece of recent news which I think adds a positive story for Altria. They are selling part of their stake in Anheuser-Busch InBev stock. This will net approximately $2.4 billion while still keeping at least 7.8% of Bud's shares. Altria is directly using that money to expand their own share repurchase program. That is now being raised to $3.4 billion and is set to be complete by December 31st, 2024. I really like this move for shareholders. It has 2 main benefits. First, a sizable chunk of Altria shares will be repurchased. That means existing shareholders will likely own over 4% more of the company. This will likely be a positive catalyst to drive up the price of Altria's stock, which, believe me, is much needed. Second, the decline in shares outstanding will actually decrease the total dollar amount of the dividends Altria has to pay every year. For example, Altria pays $3.92 for every share outstanding in current annual dividends. In fiscal 2023, that was $6.7 billion. With fewer shares, that percentage of cash allocated to dividend payments may decline. This will give them even more room to grow the dividend payment and invest in their growth initiatives. With 2023 free cash flow of $9 billion, Altria is fortifying its financial stability with these moves. By the end of 2024, I predict a higher stock price and an increased perception of dividend safety among Altria investors. Personally, I will continue buying Altria stock at this low price range. In fact, I just started putting in new orders again now that the price has fallen to the low $40 after its recent rise to $45. So that's an updated look at my long-term dividend growth stock portfolio. You got to see how much my $166,000 account makes and what I choose to invest in. Please leave a like, share, and subscribe to the channel if you want to see future portfolio updates. Sign up for dividenddata.com if you want to use the research tool I've been showing throughout. If the software helps you find just one better investment, then it pays for itself. Thanks for watching.